All right.
Okay. Um, so where we stopped, we did, yeah, so if it's cost of goods sold, you're gonna debit cost of goods sold, credit the merchandise inventory. The next question. Says, let's see, the 15. The company paid $760 cash for freight charges on the merchandise purchased in, on January 7th. This one is a debit. It's not to shipping, it's gonna be a debit to the merchandise inventory and credit to cash. And that's because January cost of goods sold, cost of goods sold.
Why is it not to like freight charges or something like that?
Because, hold on, I'll tell you something. This is January 15th. Yeah, there it is. January 15th. Come on. January 15th. January 15th. Debt. I'm sorry, January. Where's January? It's past. Here we go. January 15th, debit and merchandise inventory, credit and cash. The reason is because we want to have an accurate accounting of the cost that it takes to not just purchase merchandise, but to bring it up to sale. That way, we know how much it costs to run the business, right? Just buying, you could buy, when you start getting into these massive purchases, just purchasing product means nothing. You still have to pay shipping to get it shipped to you. And sometimes that you've got to add both of those costs, and you don't want to be in a situation where so you didn't budget out for that, the shipping too. Right? All that goes, shipping, insurance you might have had to pay for the shipping, all, storage, all those things go into merchandise inventory. So then the next one, they bought, next one, 16. The company received $4,170 cash from Delta Company for services provided. It's a revenue, so you just debit the cash, credit the revenue. The company paid Kansas Corp for the invoice dated January 7th, net of the discount. So they were invoiced, so that's an accounts receivable. They paid it, so we're gonna debit cash, credit accounts receivable. Does that make sense? So I think I'm gonna stop about here. So I'll start with the January 17th one because I wanted to get a feel. So we've been working on that for about 25 minutes now. So what I wanted you to get a feel of is this is the majority of the work. So after this, after you've gone through this, you should have these beautiful journal transactions, right? And what you're gonna do with these journal transactions, you're gonna take them and you're gonna put them on T accounts. So we'll do a couple on the board. Now, I will warn you, sometimes people skip the journal transaction, go straight to T accounts. And there's a method for that, but I'm gonna show you doing this step by step. So, the first transaction, we've got cash. So cash is a T account, is a credit of 1,025. Always put the date beside it, just to know. Then you've got wage expense. So they would have a T account of 205. And you got wages payable. That would have a debit of 820. That's your first one. The next one, cash, is a debit of 24,900. And common stock has a credit of 24,900. Next one, merchandise inventory has a debit of 6,500. And accounts payable has a credit of 6,500. Next one, cash has a debit of 828. And accounts receivable has a credit for 2,828. The next one, accounts receivable has a debit for 5,410. And unearned revenue has a debit of 1,450. And computer revenue, or rev, I had a revenue account. Do now. Revenue has a credit for 6,860. Accounts receivable has a debit of 4,500. And sales, or revenue again, would have a credit of 4,000. Cost of goods sold, we have a cost, is a debit of 3,370. And merchandise inventory has a credit of 3,370. Merchandise inventory also has a debit on the 15th of $760. And cash has a credit of $760. On the 16th, cash has a debit of $4,170. And computer revenue has a credit of $4,170. And on the 17th, accounts payable has a debit of $6,500. And merchandise inventory has a credit of $65. And cash has a credit of $6,435. This is about where we stopped. Okay, so that took us 5 minutes. So think about it. It took us 25 minutes to get the journal entries. But it took us 5 minutes to go from here. What it took us for 25 minutes, it took us 5 minutes to go from here to here. Well, if we go down to the T accounts, and you see like the first one's cash, is your credit for 1,025. There's your debit for 24,900. There's your debit for 2,828. There's your credit for 760. Your debit for 4,170. Your credit for 6,435. So this is why I said to you before we even got started, 80% of work is journal transactions. Okay? After you finish the journal transactions, you're home free. Because it was not hard for us to compose these these T accounts. So after you get the T accounts, what you need to do is take it starts getting even more simple. You're gonna take the summary, okay? So here, the cash account was $63,668, and you're gonna put it onto the unadjusted trial balance, right? $63,668. Now, once you have it on the unadjusted trial balance, you need to do the adjustments. Right? Once you take all the T accounts and put it on an unadjusted trial balance, you need to do the adjustments. Adjustments are simple. They're just like it's the same situation as the journal transactions. The complication is just doing the journals, not the T accounts. They're the same thing, it's just, they're just journal transactions, so here they are, right? On March 31st, the amount of computer supplies still available was $2,095. So that was the ending. We began with, if you go up to computer supplies, we began with $650 worth of supplies. We purchased $2,780 worth of supplies. I'm getting that number here. So we ended up with $3,430 available to us. We, in the end of the year or the period, we ended with 2,000. As the example says, we ended up with $2,095. So you take that total of $3,400 minus the $2,095, and you'll get the adjusting entry. And what you're gonna do, you're going to debit the computer supplies expense and credit the computer supplies. Here we go. You just had to put them in. So, if you see here, here's the computer supplies. You're crediting at $1,335, and you're going to debit the computer supplies expense $1,335. You with me? So those journal transactions, essence, they want you to put them down here on the expenses. And what will happen once you get these adjustments, you just take the unadjusted trial balance, and if it's a debit and a debit or a credit and a credit, you add it. If it's a debit and a credit or a credit and a debit, you subtract it. So here you have two debits, you just add, you take the $13,550 plus $1,880, you get $15,430. Okay. Here's one with, otherwise, like you would just bring it over. So it's $4,790. $490 in dividends, there's no adjustment, so it'll be $4,790. Anything without an adjustment, you just bring it over to the adjusted trial balance. And then once you get there, the adjusted trial balance is in order for your financial statements. The first financial statement is the 400s and the 400s, and 500s and 600s. So you'll take the revenues and then take the expenses. For some reason, I believe that you had a single step income statement on your midterm. So it's just the revenues at the top, and then you put the expenses at the bottom. Right? And so your revenues were computer services, sales. And so you just take those 25,000 and the 17,000 and just add those, and they'll add together. And then the expenses will be these expenses here. Right? So you start with, I guess, sales returns, right? Cost of goods sold. You just put them down. Very simple. So that's your income statement. Take the net income off your income statement, put it on the statement of retained earnings. The statement of retained earnings starts with the beginning retained earnings. You'll find that on this sheet, the initial trial balance. So adjusted trial balance. So statement of retained earnings, the beginning retained earnings is here, $7,230. Bring that down. Add the net income. Subtract your dividends. You'll find your dividend number on your adjusted trial balance here, $4,790. So you got the beginning plus the net income minus the dividends will give you the statement of retained earnings. And then the final one, the coup de grace, is the balance sheet. You're going to take this statement of retained earnings here, $16,763, put it right here. And then the rest of this comes straight off the adjusted trial balance, $63,668, $23,257, $694. If you go on back up to your adjusted trial balance, $63,668. If you add these accounts receivables, you'll get the $24,000, and then merchandise inventory was $694, which should match $694. 2,095, 1,272. They're in order, so you don't even have to worry about that part either. 2,095, 1,272, 895. They're in order. And that's that. Once you finish the journal transactions, you're home free. All right? Now hold on for a second. Now I'm gonna give you a hint I'm gonna give you a little edge on your colleagues. Let me pause this.